Wow, that is awesome, Zach. Hey, welcome everybody to Freight Forecasting. I'm Mike Vincent. Zach Strickland, the Sultan of Sonar. What do you think about that opening, right?
Is
that great to hear again?
It's been a minute.
It's been a couple minutes, but it's back now. So what we're gonna do is we're gonna go through the first 10 minutes of your day as an intermediary, a broker, freight broker, utilizing Sonar.
Yeah,
right?
Yeah, exactly. So, I mean, this is how I start my day. I kind of approach every day, regardless of my angle perspective, like a broker would. So, an intermediary obviously looks at things from both perspectives, the carrier and the shipper side.
Yeah, right. They are both, right?
Yeah. So you have to pay attention to capacity as well as the buy side transact or the sell side transaction. So, and that's what Sonar does so effectively. So.
Yeah, we don't have a whole lot of time, so let's go through and once you get this thing down, boom. Yeah. 10 minutes is enough to know everything that's going on in the country.
It doesn't take me 10 minutes to do this.
No, it does not. But explaining it to somebody takes about 10 minutes to show them what's going on. So let's throw up the first chart, shall we?
Yep, let's do it.
Let's talk about what's going on here. Right, so what do we got here, Zach? We've got outbound tender rejections in blue, which are, what's outbound tender rejections?
So yeah, this is the outbound tender rejection index. This is going to measure, the basically carrier compliance throughout the United States at an aggregate level. I like to start off my day at a very high level, looking to see if there's any significant market movements or changes. So this is a good measure of seeing, how much capacity has changed day over day and the aggregate level. If it has jumped up, as you see there at the end, that means that I need to pay attention.
Right here.
Exactly. So there's two indexes going on here. One is outbound tender rejection index, the rate at which carriers reject their electronic tendered loads. The higher that goes, the higher the rates go and the tighter capacity is, the lower it goes, vice versa. Tender volumes, a measurement of demand and changes in demand. So these are total tenders. Yeah. It's an index. It goes up. That means total tender demand going up with it. So these things are both going up right now. That means that there's a signal that I need to dive a little bit deeper to see where exactly capacity is tightening the most significantly.
Yeah, when you see this jump here at the end here of in the green here, this is the volumes, right? So these are the number of loads, contracted loads being offered, right? When you see this, when it jumps up and goes down, do you normally see an immediate one-for-one reaction like you're seeing right now?
No.
You really don't, because these times right now are so, it's like super saturated atmosphere. One little bit of energy and boom, like we saw in Texas, which happened right here.
Right there, that big jump. Right? And that did happen over the course of just a few days. That's very rare that happens, but we got the early warning signs and then you got the signals and it wasn't just in the areas that you thought it was.
Right, okay, so we've got in the green here is the outbound tender volumes nationally, and in the blue is basically capacity in the contracted market's ability or desire to handle those. Yep. And when it goes up, there's less desire or ability to handle those. It's spilling into the spot market. That's the basic premise?
Basic premise.
Right. Okay,
Rates
let's move on to your maps.
That line goes up. And so we've got the maps here. So this is going to be my outbound tender market share. This is, the taller the market here, the higher the volumes coming out of that market. So
in this 3D map, the height of these markets is its relative market share to the rest of the United States.
Exactly.
So Atlanta's big.
Exactly. These are going to be the markets that have the biggest chance of impacting national capacity. So the colors, however, is a little bit different. Now this is a measurement of both volume and weekly change in tender rejection rate. So it's basically weighting the weighted rejection index. It's weighting the market's tender rejection changes week over week. So this is basically telling me where is the most significant change in the marketplace in the 135 markets week over week.
So this is taking into account that, like Bismarck, we've picked on for years, and really for no other reason than it's a pretty small market, right? So this is going to tell you that 2 loads in Bismarck being rejected today versus 1 yesterday is a 50% jump, but it's not that significant of a jump.
Exactly.
Right? This takes that into account.
That's exactly the point. Like we don't want to pay too much attention to Bismarck on a daily basis because unless there is a, say all of a sudden there's 500
if Bismarck were to
loads.
show up on here, it would be because it went from 2 rejections to 50, which is a big thing.
And that can...
It takes out the percentage.
Exactly. It takes out the percentage change. It ignores the base. So
tell me what's going on here. This is Jacksonville down here in blue.
Yep.
What's going on in Jacksonville here? What is this telling me?
So Jacksonville it's not a super tall market, but it has had a pretty significant tightening event week over week. So tender rejection rates have come up significantly. Those darker blues are what that indicates.
Right, so it's a smaller market compared to these taller ones, obviously, you can see that, but it's blue, meaning it's having an effect because there was a significant event. Detroit, what's happening there? It's red.
So that is a market that is loosening rapidly, week over week. Now, it doesn't necessarily mean it's the loosest market in the country.
But relative to itself.
Relative to the rest of the country, the weekly change has been significantly more so to the downward side. So rejection rates may have been 14%, they came down to 11%. That's a significant change for Detroit.
Significant change. Now, there's a bunch of people out there that go, I've been in brokerage for years. Detroit, duh. There's capacity there. It's not a big outbound market, right?
But it got looser.
But significant to itself, it's significantly looser than it would normally be. So there would be downward pressure on rates and so on.
Versus last week.
Versus last week.
This is a very near-term way of looking at the market. You want to see the most recent changes in the markets.
Right on. Should we go to the next one here?
Let's go to the next one. So now you've seen it on the map. Now this is kind of like the visualization of that map's colors. So the market that is tightened the most significantly using volumes and rejection weekly change, Denver up there in the top left, and down there in the bottom right, your Detroit market.
So why is Detroit so big in the upper right or in the bottom right, and Denver so big in the upper left?
So this is listed from the biggest overall value of the weighted rejection index in the top left to the smallest weighted rejection index value in the bottom right.
So Detroit is hugely small?
It's hugely small.
Gotcha.
Or hugely negative, I should say.
Oh, hugely negative. All right, that's a better way of saying it. I like hugely small, though. It's not bad. Hugely negative is it. So this is just a quick visualization of saying, all right, if I've got to worry about the entire country, right? These bright green ones or these large green ones that are dark green on the right-hand side, these need to be drawing my attention really quickly.
I'm looking top left, bottom right every day. Those are the markets that need my attention the most significantly.
Gotcha, gotcha. So this is prioritizing your day.
Exactly.
Boom, something's going on here. All right, what's the next one we got here? Oh, try Denver. You decided to look at Denver.
Yeah, so basically this is just, now I can go in and dive a little bit deeper into Denver. This is the first step in that process. You see Denver rejection rates have actually jumped up quite a bit very quickly here over the last couple of days. I'm now going to go into some other tools that I have. I'm going to call my carriers. If I've got a managed transportation situation, I'm going to be active on the spot market today out of Denver more than likely versus last week. Or maybe conditions are going to return to where they were a few weeks ago when tender rejection rates were at this level. So we just had a big snowstorm in Denver. Shippers kind of shut down their activity for a little bit. So things have ramped back up here and probably clogged the system there.
Yeah, they probably did. And it's going to happen again. Everybody's going to go skiing this Friday. I hear there's going to get a couple feet of new snow, too.
New powder.
Which would excite you as well,
yes.
as it did me. So you see in this really, over the last couple of weeks, this volatility, way down and boom, way back up. This is what's causing changes. And this, by the way, we're looking at Denver. What was in the upper left hand? Denver and Detroit. So that's what you've got compared here. So you got this huge, in the opposite direction, but just as meaningful. It fell off a cliff in Detroit.
Exactly. So over the last week, Detroit tender rejections have come down significantly. You've got a little bit more pricing power as a broker coming out of Detroit than you did a week ago. And to the opposite end of that on Denver, you have less pricing power than you did a week ago.
That's exactly right. That's exactly right. Do we have time to look? We really don't have time. We can show it real quick, though, I think.
Yeah.
Right?
Let's show them the last thing. It's kind of a tease.
This is going to have to be a tease because this is really quick, down and dirty, and easy to use, but we need to explain it to you very, very well. But lane signals here, right?
Lane signal.
This is really strong stuff that is telling you and predictive what the rates are going to and where they're at right now. And not the rates today are $1.05.
Yeah.
But where they're going relative, right?
Yeah. And effectively, that lane signal right there, it's an index of all that information that we just talked about. That lane signal is an index combining all the tender data into a rate per mile. The direction of that index is what's important. You have some other variables up there that are going to help you add color to your decision as well.
Yeah, excellent stuff. And like we said, this is a tease. Zach and I will be on weekly, Thursdays, 2 o'clock, freight forecasting, go through all this stuff. Stay tuned for a fireside chat with Emily and Chad Eichelberger.